Hi, and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin. We've recently seen a bit of a push to the upside yesterday, so we're going to be reviewing the structures for BTC on the hourly, daily, and weekly timeframes. What's changed, what hasn't changed, where I think Bitcoin is heading. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, kicking things off with that 1 hour time frame. So Bitcoin paired up with USDT. We're using the BitGet spot exchange here, and we saw this move to the upside. So we were expecting a further downside move. I think that has kind of voided out. We had this move upwards towards equilibrium, getting rejected on the 50 SMA and 50 EMA here. Obviously, we can still rally up a little bit higher if we needed to. I've got a couple of different wave counts potentially on the horizon here. So we would potentially see a wave one up here at the $26,800.02. This essentially would be that if price were to cross this level, it would break our structured move to the downside. And then, of course, we've got a little internal one just here at 26,490.67. Again, tracking the idea that we're in a kind of wave 3, and there's 5 waves internally within that wave 3 here. Okay, the move to the upside from yesterday would essentially just be a corrective wave 4, okay, meaning that we should drop down towards the finishing move for the wave 3. Okay, so let's do a couple of checks on this. Okay, so we have a diagonal at the beginning, nothing terribly too unusual about that. But what we're looking for here is to see the 1.618 target ranges. So let's go ahead and just pull this down here. 1.618 would basically be, it's actually already hit. So our 1.618 has already triggered at that point. I suspect, though, that we still have further to the downside to go. So although we've kind of hit the minimum expectation on, or we've hit the trigger point for an impulsion to the downside, as in we're trending to the downside, we haven't yet finished, in my opinion, that move to the downside. Now, there's a couple of different ways we could look at this. We could have a overextended fifth wave, and that's how we ended down there. That's a possibility, and we're just in the wave 4. Or alternatively, we've actually still got further to the downside to go. And realistically speaking, we kind of have a wave 1, wave 2, wave 3, wave 4, wave 5 within the third wave of the third wave, meaning we still have further to the downside to go. Ultimately, I think the neatest way of looking at it might be an overextension, but I think it will become clearer in time on this smaller time frame where things are heading. Personally, I don't think I would trade the structures here for Bitcoin at this point in time. I would rather wait for more clarity over what is going on the hourly chart before I were to jump in on any potential trades. At the moment, it looks like we might have another test of equilibrium, so another push up towards those EMAs, so 26,339 upwards towards 26,519. Okay, so that's going to be the areas that we'll be kind of thinking about potentially pushing the price of Bitcoin towards on the smaller time frames. Taking this out of the hourly and into the daily, we can actually see things are not as anywhere near confusing, and actually is quite simple. We could trade the daily chart with a bit more confidence than we can that of the hourly chart. Here we can see death crosses, essentially the 50 moving average crossing down lower than the 200 exponential moving average, and the 50 exponential moving average crossing down lower than the 200 exponential moving average on the daily time frame. So death crosses occurred on the 24th, and we will see reactions to that over the course of a little bit of time. Ultimately, I think we're in a wave 1 of a wave 3 of a wave 5. That's a lot of a mouthful to kind of talk about, which means I would expect a bounce upwards soon towards kind of $28,000. Probably not $28,000 to be fair, but we'll see how price reacts at that kind of $27,000 level, potentially 27.5. Okay, I'm expecting a bit of a bear market rally in the month of October. So yeah, I think we're going to see that kind of come on through here. I could be wrong, but I would expect a wave 2 of a wave 3 of a wave 5 within here. So, for me, I'm looking at this as a potential wave 1, up here for a wave 2 in month of October, down into a really sharp wave 3 for then final 5th wave, all of which will be a wave 3. We then bounce and then we drop down into another wave 5. That would be my kind of approach to this one, meaning that we can potentially trade this one. And of course, if I am to trade, I'm going to be trading using leverage on BitGet, and I would be looking at a short position here. I would potentially just jump in. There's probably going to be better time to short later, obviously. So it depends on your kind of strategies here. I mean, you could look at the 50 moving average at 26,827, for example. Stop loss up above the wave 4 swing high. So it would have to be higher than 28,134, in my opinion. And then obviously take profit, we can move that down to our take profit range at around 23,874. Gives us a risk reward ratio of 2.16. So good risk management should always be adhered to. Do not risk 100% of your portfolio, those kind of things. And the 1% rule and all that kind of stuff kind of applies. Obviously, I'm not a financial advisor. I cannot give financial advice. All I can do is tell you my approach to this in my personal opinion on it. So if you haven't yet signed up to BitGet and you are looking at trading, whether that is spot trading or whether that is leverage trading, why not check it out? Link is in the description below. If you do use the code, the affiliate link in the description below, you are eligible for up to, I think it's $8,000 of rewards and deposits, depending on how much you deposit and trade on the platform. So why not check it out if you haven't done so already? You can also join us down in Discord, where we do weekly trading competitions with the BitGet affiliates. So why not check it out? So yeah, for the most part, I suspect we still have further to the downside. We haven't broken out of this structure, so the target range sits at 22,696 to 23,875. The invalidation is set up there at 28,588. So if price does go up higher than 28,588, we break the structure. Breaking the structure essentially means that we are no longer in a 5-wave move to the downside. Okay, so it is what it is. From the weekly standpoint, you can see that we found the upper area of resistance up at 28,600 to 32,289. This was tested twice and rejected both times, finding brief support at the moment on the 200 exponential moving average on the weekly time frame, 25,694, and that is the support level. At the moment, 50 exponential moving average is resistance. This is 26,784. So for the most part, we found ourselves in the last 5, nearly 6 weeks just trading sideways between the 200 exponential and the 50 exponential moving averages. So nothing much has really changed there. Now, when we take a look at this, we can obviously see that I suspect that we probably will be bouncing from this 200 EMA like we did previously, as I was talking about bear market rallies. And now, from a weekly standpoint, it doesn't really have a good clean structure in the same way that we see from the daily time frame. So from a weekly standpoint, it's possible that we retest those highs at around 28,600. However, we know from the daily time frames that would break our bearish structures, and so we'll kind of be really cautious about thinking about those potential moves up higher until we actually have confirmation of breaking out from those bearish movements. If we fail to break above those or break out of those bearish movements, then of course we should always consider the positions to be bearish rather than bullish. So just bear that in mind. Now, from our curved lines here, we have connected all the peaks and all the troughs for our Bitcoin price action. And when we actually follow this through, we can see potential lows of around $12,000 possibly on the horizon. Again, it's possible that we have bottomed with a 𝗕𝗪𝗀𝗃𝗃Z pattern for Bitcoin, and at the same time, it's possible that we have not. Okay, so we have to kind of be really cautious here. We have not got a trend to the upside. We found upper resistance. Things are not necessarily stacked very well in the economy, so I think a broader economic macro climate will actually potentially bring Bitcoin down deeper. Couple this with the fact that many of the larger investors still haven't dipped their toe into the world of Bitcoin. Yeah, potentially what's going to happen with retail investors who hold a very significant amount of the circulating supply of BTC, enough to bring the price of Bitcoin down should they panic at any point. So for the most part, yeah, it is what it is. We'll see how it kind of goes over the next kind of couple of months or so. But for me, I think there's going to be some opportunities for some cheaper BTC. Let me know what your thoughts are down in the comments below. I'm going to leave the video right there. If you have found this useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, and I'll catch you all in the next one.